Hello everyone, welcome back to the channel. September the 4th, Wednesday. We have some data coming later today, so pay attention to those events. Also for the Canadian and US jobs openings, so basically that may shake the market a little bit, so pay attention to those events, of course. But my main objective for today is to cover the market in 15 minutes, so let's delve into some of these patterns and charts that I shared before with you. This is the DXY on a daily time frame. We are back to the previous, we are back to the first Fibonacci level, the 23.6% Fibonacci retracement level. This may be one first pressure zone for the DXY. The market corresponded to our expectations based on the previous support and the retest of this previous fractal level. We were expecting a bounce eventually towards 102.16. This is a previous fractal support level. I also mentioned the 38% Fibonacci retracement at 102.80, so this is also another Fibonacci level if the price can't find resistance at this very first level. So I admit a potential pullback for the DXY from this price level of this price zone, eventually just to a small relief after this initial bounce. So wait for that pullback for the DXY. The same inverted may happen for the cable after this pullback to this retracement level. We are now facing a potential move to the upside. We can also track these moves, especially for the pound and the euro versus the dollar. We can track those moves with retracement from this last move to the downside and search for the 61.8% Fibonacci retracement level. Ultimately, this is my extreme levels to search for resistance for the next move to the downside. So 131.99 golden Fibonacci retracement level. Of course, the same may happen for the euro versus the dollar, which also corresponded to our expectation at the beginning of the week. Fall to the very much the same level of Fibonacci level, 23.6% Fibonacci level, a few points lower, 110.26. That's our recent lows for the euro dollar. So I also admit a potential bounce from this price zone. Track the 61.8% Fibonacci level. That may force this may force a retest of this monthly fractal resistance above 111.39. So I admit that possibility also for the euro versus the dollar. And of course, if that happens and we can do this exercise on all of those pairs, we can track a potential symmetrical pattern. As you can see, even a symmetrical pattern, of course, if the market reacts from the golden Fibonacci retracement level, of course, and this may not happen, okay, this is just expectations based on the most recent lows, previous resistance levels. So I admit a potential bounce from these levels. If the market later reacts from the golden Fibonacci retracement level, we can start to track the potential ABCD pattern or a symmetrical three-wave structure to the downside. For now, the Kiwi, let's reduce our time frame also for the Kiwi. It's important to pay attention to this channel to the upside. This is one of the reasons why I admit also for the Kiwi a potential move to the upside. Let's also track the potential of the eventual move towards the golden Fibonacci level, which points near 62.49, and of course I'm pointing to the 61.8 because it's my extreme level to search for resistance. We have other levels which are important for sure. The 38% Fibonacci level. In this exercise we may apply on all other actives and all other pairs that I mentioned before, the cable and the euro and the Aussie. But also the 38% Fibonacci level, it's a level of pressure, so it's also an important level to help defining the next move or the strength of the next move. So let's move forward. Basically the same exercise for the Kiwi, admitting a potential bounce from these levels and also respecting the structure support of the ascending channel. The Aussie Also back to the 38% Fibonacci level. We have also an edging shoulders pattern completed at the 200% Fibonacci retracement extension level actually. And we are back to this previous support level as we expected at the beginning of the week, back to these lows. I also admit a visit to this previous structure or this previous range, so which may converge with a visit to the 38% Fibonacci level. For the Aussie, very much the same. I admit a bounce from these levels. Pay attention if you want to both levels, 38 and the golden Fibonacci level 67. 700, it's my ultimately my extreme levels for the Aussie.
Hi, my name is Blake Morrow, president and co-founder of Forex Analytix. If you're watching this video, that means you're in search of a trading coach, a personalized coach that can help you get to where you want to get in the markets. Whether you choose myself or one of our other well-qualified coaches, it's up to you. Every one of us comes from a different background, and every one of you looking for a coach comes with different needs. So make sure you go through, peruse all of our coaches, read their bios, watch their videos, see which coach is going to be best suited for you as an individual trader. And I'll see you in the coaching session.
Dollar versus the Norwegian krone, a nice reaction to the upside as we expected before after the formation of this gray bullish bat pattern completed 1044, and we saw a nice reaction to the upside. We have now projected a bearish shark pattern just a few points above the recent high, so I need to see a third high for the Norwegian krone, and if that happens, that may help completing the bearish shark pattern 10,755. So I admit the price may retrace again or may pull back again, and eventually retesting these daily fractal levels again. Wait for the formation of this bearish shark pattern may offer a move towards the 38-50% Fibonacci retracement level. Now for the dollar versus the yen, I need to go into a daily time frame chart. Actually, I need to go into a 4 hours time frame chart, and that's because I have a few levels projected above, which remains possible to achieve. So I have a cluster box. Let's point to 154.19. So this is the golden Fibonacci retracement level. There's a nice cluster box above the daily fractal resistance, but this recent push lower may open the door to the formation of other patterns. So based on the recent Fibonacci criteria that we have at our disposal at this point, I can project a pattern below the support 136.92. Let's delve into another pair, euro versus the pound. I'd call your attention to this bullish pattern. This may unfold into a bearish flag pattern. So we have a well-defined range. So after completing this bearish flag pattern, which looks like the market may unfold into new lows. Okay, so pay attention also to that possibility. Moving forward, euro versus the New Zealand, nice reaction to the upside as we expected. Basically, we achieved the 200% Fibonacci extension level, so this is the default target for this edge and shoulders pattern formation. We also pointed to the golden Fibonacci extension level 177, golden Fibonacci level, bullish shark pattern, nice reaction to the upside. We are a few points away from at least the 38% Fibonacci level 180.20. That's the default target. Well, the default target lies at the 50% Fibonacci level, but at least at 38% Fibonacci level we expect to achieve. Pound versus the Aussie, we expected this move to the downside. The market once again found support at the golden Fibonacci level, incapable to break below these lows, and it's now again back to this structure resistance. I admit that this time the market may be pushed higher. Okay, so we have the golden Fibonacci level 197.44, so I admit a move towards these Fibonacci levels, eventually a retest of this structure later, in order to find support for more upside, but I admit at this point I admit a breakout of this expanding triangle to the upside, of course. Gold, also we still tracking this 2470, so I admit that a violation of this support will trigger a small move, or at least a small move to the downside. We have a nice cluster projected below for gold between the 38% Fibonacci retracement, the 161.8% Fibonacci extension of the last swing high, and the 200% Fibonacci extension, which is a default target for the eventual double tops. So that converges with the formation, of course, at the golden Fibonacci, a bullish crab pattern 2434 for gold. If the price breaks below, you not only have a trade to the downside, but we have to pay attention to this cluster box projected below. Silver completed the edging shoulders pattern that we projected before, 200% Fibonacci level, 2763 achieved, actually 2783 achieved. Bullish crab pattern completed, very much the same pattern projected for gold. We have silver already completing this sequence, so expect a reaction to the upside for the metal. Of course, if gold keeps trading lower in order to complete that same sequence, silver may be forced to trade sideways or even to trade lower. Okay, so pay attention to those details. Crude oil forced to trade lower, breaking support levels, specifically the weekly fractal support 72.24, but we are seeing now a retest of the previous lows again. So we have a new lower low at 69.84, and we are now we already moved a few points higher in order to retest this weekly fractal resistance. So we need to, in order to see more momentum to the upside, we need to recover that fractal resistance level. But as I said before, we have also a bullish crab pattern for crude at 67.24. So that forces a retest of these previous lows from December, the monthly fractal support at 67.81. So right below that fractal support, we have a crab pattern, and that pattern may offer a nice move to the upside, and eventually a nice opportunity also to apply a risk strategy for midterm projections for crude oil. SPX500, we have been calling your attention to this bearish alt-bat pattern completed at 56.33. Nice expanding triangle. We also noticed this pattern before and recently this week. Pushed lower as expected, just printing a new higher high above the previous fractal was enough to push the price lower. Pay attention to the 38% Fibonacci level that lies at 54.42. That's ultimately one of the next pressure price zones for the SPX500. The German DAX, of course, very much the same, a new higher high, new historical high for the German DAX. Basically a false break of the resistance and a pullback to the, in this case, to the 23% Fibonacci retracement level, the very first Fibonacci level. Bitcoin now trading below the daily fractal support level. Actually, we have a new fractal support at 57.131. So I expect more momentum to the downside. Wait for the formation of a bullish crab pattern, and retest of these previous lows may offer a nice opportunity to trade higher, or eventual opportunity to recover from the drop. So I will expect a reaction to the upside, or an attempt to recover if this pattern completes at 50,600. That's the golden Fibonacci extension level. So we are tracking the crab pattern, the extension of the last move to the upside. So then we have the next swings completing the criterias and the Fibonacci criterias to complete the pattern if achieved. So pay attention to more momentum to the downside for the cryptocurrency, and I will expect for the formation of this bullish crab pattern. That's all for today. I hope you enjoy. Have a nice trading week, and I hope to see you in the next video. you.